Hello and welcome everyone to the week ahead commodity reports, where we will be reviewing the markets for the week ahead. So as we go into a fresh week, what do you need to be aware of? We have seen that hedge funds and money managers, they have yet again increased their overall net long positions in both gold and silver. Gold is now up 5 consecutive weeks in a row. Of course, last week broke out above 8-year highs to break out above 1,800 US dollars per ounce. As we discussed with you last week, we also capitalized on the breakout via platinum, which in fact banked us 700 points. The platinum to gold ratio broke down to all-time lows at the end of June, setting up for a fantastic buy opportunity as platinum prices were the cheapest they had ever been relative to gold. So again, congratulations to everybody who caught the fast profits there on the platinum trade, the setup that we identified with you the previous week. Now with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a fresh week. First of all, moving over to gold, which closed at 1,797 US dollars per ounce on Friday. I would move across here to the monthly chart and observe where so far on a weekly closing basis we have had a failed move below 1,800. So this has been quite important level of resistance going back to 2011. We saw multiple tests at that zone but failed to break out and follow through. This is worth being aware of as we head into next week, because what we really need to see here, if gold is going to continue to propel higher, would be a weekly close above 1,800, and we need to therefore start to springboard higher from these zones. Otherwise, gold is vulnerable to a takedown here. So if we go over to the daily chart here, you'll see where we've had a couple of days of pullback, especially into the close here on Friday, back below 1,800. So next week's going to be very important. And again, I would look at pullbacks as buy opportunities, but be patient in waiting for those corrective moves. We were doing exactly the same for platinum, where we picked up positions just above 800 US dollars per ounce. You can see where we've worked out into this breakout formation over the last week and a half, which gave us the 700 point move. But we're subsequently seeing a bit of pressure here, not only for platinum, also for silver, putting back into the close in gold. In fact, just giving you a bit more color here on platinum, going into next week, if we do get another pullback back towards a key area of liquidity here, the 800 US dollar per ounce zone, I'm very interested to look at buying evidence at that zone again. Previous major level of resistance turn support, looking at opportunities if we do get a sell-off back towards the 800 level to re-add to our platinum position at these zones. Okay, so if we do see pressure to the downside on platinum next week, I would look to buy back in lower, but be mindful that that will very likely correlate to a pressure to the downside on gold and silver as well. So far, we continue to see very shallow retracements on gold. I'm not expecting this necessarily to continue as we get past mid-July, which normally provides some vulnerability in terms of cycles and seasonality as we progress throughout mid-July. Again, we mentioned last week, don't FOMO into gold. So for those FOMO traders who started to buy gold towards the highs here at 1,817 US dollars per ounce and so forth, they have now gone into losing positions here as we go into next week. They're now underwater with their long positions where they're FOMO'd in, they've got in too high. And gold can punish you when you buy it too high. As many of you are aware of, you're better off being patient, waiting for these corrective pullbacks. We've seen gold go up throughout the last month with only really very shallow retracements here, and I'm looking now for more significant corrective pullbacks to buy back in lower. That will be the same here with silver. So again, when silver tapped $19 per ounce on the first test of that level, we haven't seen follow through above that zone. So you can see where we tapped up to $19 on Thursday, no additional follow through. Subsequently, we've had a retracement here on Friday, and again, we want to get a decision here going into next week whether silver can break and close above $19 per ounce. We mentioned previously, if silver was able to break and close above $18, this is where it will pick up significant momentum to the upside and make a move up towards $19, the recent swing highs going back to February. That's exactly what we saw there for silver, and in fact, we've tapped the levels we mentioned previously with gold. Target zones at 1,800. The price has magnetized towards that very key level of 1,800 US dollars per ounce, but now towards the end of last week and into the close, we haven't closed above 1,800. So there is some vulnerability here on higher time frames for the metals unless we can see gold establish more momentum above 1800 next week. So that's really what you want to keep a very close eye on. And of course, the opportunities here, which I'm looking for platinum and also silver too. Then moving over to crude oil. So crude oil, as I mentioned previously, is a great range-bound market. You can see again last week where we effectively ricocheted between 41 US dollars per barrel down to 38, and it's really been just an ideal range-bound market for the time being, playing the tighter ranges here until we get a resolution here for crude oil. Now, hedge funds and money managers, they have slightly trimmed their net longs for crude in the latest week here, but at the same time, we are seeing pullbacks get bid. It's the same on the S&P 500 and US equities right now. Each pullback is getting bid back up, so it's better just to trade the ranges at the moment. So hedge funds, they've reduced their net long slightly on oil, but I would watch out next week for Tuesday's API data and also Wednesday's oil inventory data as well. Now with gold, it is up 19% so far this year, and there are a lot of traders and investors who are looking to capitalize on further breakouts to the upside. But again, you just want to avoid those FOMO entries. Be patient. There are some very specific ranges and levels that we're looking at as we go into next week to reload on gold, which we'll be going through in detail with our members. And of course, right now, there's really never been a better time to optimize your trading and learn a research-driven approach to the markets. As many of you know, capital just sitting in a bank account at the moment, especially after so many central banks around the world have reduced interest rates. In fact, many banks are now looking to go to negative interest rates. With that, it's a time that you need to take control of your finances so that you are making much better returns on your capital, on your investments via trading, which is where a research-driven approach to the markets will give you that edge, where you're trading the same way that the hedge funds, the money managers do, the professional traders, the institutions in the market. You're not trading the same way that retail traders do, who use 100% technical analysis. They're constantly getting chopped up, they're losing money, and if you're not making money at the moment in these markets, you absolutely should be. This year in 2020, with the volatility that we've seen in the commodity markets, has been absolutely phenomenal, and we're halfway through the year now, so there's never really been a better time to capitalize on the moves that we're going to see now in the next 6 months. I'm sure many of you are aware of the price targets that many banks and funds now have for gold in the following months, but the real trick is to know when to buy, know when to sell, and don't make the mistakes that so many retail traders make, which is to FOMO in at the wrong levels and get taken out of their trades by using technical analysis alone, which just simply does not work in these market conditions. So if you would like to learn a research-driven approach to the markets, join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below today's report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.